Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark comments on the Dow hitting another record high. Trends Journal publisher Gerald Celente tells us, while President Trump's popularity rating is low, consumer confidence in the U.S. is at its highest rate since President Reagan. He also does not like the push towards a cashless society, calling it another government tax grab. And Arctic Star President Pat Power explains why an Uptick rule needs to be re-established in Canada to protect our junior mining companies from predatory trading practices. Plus, at the end of the show, we'll feature a company showcase update with Cascadero Copper President and CEO Bill McWilliam. We'll talk to Ross Clark right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Pleasure to be back, Jim.
The Dow just kept hitting record after record the past couple of weeks.
It has been quite the move. We got a two-day pause at the end of the week, but that still makes it the highest weekly close in history. The S&P the same way. The TSX having a pretty fabulous stretch here as well. We've been looking for a pause of some sort once we got past the middle of February, but so far there's really no hiccup here at all. And internally, you're still seeing lots of new 52-week highs with virtually no stocks making new lows, and that was even with a bond market that took a bit of a hit this week. The talk clearly that the chances of a rate hike by the middle of the month are pretty good, and as we get to the second half of the year, there might be another 2 rate hikes before the year is out.
What's happening with gold?
Well, gold had a very, very good rally in through the latter part of February. The miners, though, they peaked out February the 8th and really underperformed. And at the end of a week ago, you had the bullion, silver and gold, making new highs for the year on a closing basis, while the stocks were closing at new monthly lows. So the type of divergence usually brings about a bout of selling, and we had that right through Friday of this week, and it's got some nice oversold readings on some of the mining stocks. And if we look at the big picture, we're probably going to get a decent little bounce out of here, and then maybe a retest of the support. But the 8-year cycle, the big one that we monitor here, having moved through 1237 on gold, that would help us determine that the probability of the 8-year cycle low being in place is really, really good. And normally here, 3 out of the 5 times that we've had this 8-year cycle, the market only retraced 38%, a nice Fibonacci number, of the rally off the bottom. So in this case, we're looking for the area around 1210 on gold to be the absolute important number here for the next couple of weeks. We closed off this week in the 1234, 1235 range. So there's probably, support to be tested maybe $20, $25 below where we are right now. And if that can hold there, I think we could be set up for a pretty good move on the upside. If it starts to work its way through that, then 1180 would be the next area of critical support. And ideally, we want to be looking to be paring back into, I would say, overweight or at least full sector weight in the complex if we do see those kind of corrections.
Is a play on gold really a play on the U.S. dollar, at least right now?
Oh, it is. It's one and the same. And the day-to-day action clearly has been a reciprocal of one another. You've been seeing that in gold versus the dollar. You've been seeing it in Canadian dollar versus U.S. It's pretty much across the board. Our overview still is that the dollar index is still in a rising trend, probably targets about 10% above where we are right, 10 or 12% as we move through this year. But once the dollar has found its high, and I wouldn't be at all surprised if that happens in the first half of this year and then starts to reverse. If we were to get that to come into play, that will really put the bid underneath the precious metals.
The Canadian dollar has hung in around the 75-cent U.S. mark for quite some time. Will it hold in or will it fall?
Well, I look at it as a commodity currency, and if you look at the CRB index and you look at the oil market this year, and then compare that to the Canadian dollar. The Canadian dollar did not manage to put new highs in here during January and February, whereas the oil market just inched up. We got up to the $54 to $55 level, making marginally higher highs. And anytime when you look back on it that there's a divergence like that where the Canadian is unable to match the movement in the commodities that really are the driving force behind the economy here, anytime we've seen that, you've ended up with the dollar breaking down. It doesn't have to be dramatic, but it does end up with putting a lid on the dollar and gives us a downside bias. So this was a poor week for Canada, and it wouldn't be at all surprising. We gave up, I guess, 2 cents here in the last 3 weeks. You might get a little bit of a bounce, but overall, pressure looks to be to the downside as the U.S. dollar works its way to the upside.
Ross, thanks for talking with us.
Always nice to be with you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Trends Journal publisher Gerald Celente next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Taron property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. His spring edition of the Trends Journal is available right now. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Always great being on with you, Jim.
First, President Trump gave his first semi-State of the Union address this week before Congress. What is the real state of the U.S. Union?
Well, it's never been a more divided union. I guess it's almost hard to call it a union with such a split. I mean, it's, families fighting within families, friends becoming enemies, colleagues not speaking to each other. I've never seen anything like this in my life as an American citizen. Having said all that, there's still a very strong Trump core base. So even when you see that his popularity rating is at near all-time lows for a new president, he has a very strong base that's not going anywhere. And so the State of the Union, in terms of its mental state, isn't very sound. But as the other factors show in, for example, consumer confidence is at now a 2001 high. You saw a spike in small business confidence, the biggest one you saw since 1980 when Ronald Reagan got elected. And so when you look at those factors and you look at the strength of the economy and the business optimism, it's one is on an emotional side and the other one's on a financial side. So the financial side seems to be quite strong right now.
Just over a month in office, what good things has Trump done and what bad things has he done?
Well, as trend forecasters, we look at things to the way they are, not the way we like them. The things that cause the most damage, of course, are when he put that there's restrictions on people coming in from 7 Muslim countries. And now, of course, they've taken Iraq off the list, and which is contrary to the reason why he initially put that ban in place. And that, of course, was that, the people that hate America are coming from the countries on that list. And when you look at most of the countries on that list, with the exception of Iran, America's had military action in them, and it's killed millions of people. So that's what really caused his biggest flap so far. And again, this ongoing, who had contacts with the Russians. His slogan for the campaign was "Make America Great Again," and the media campaign and from the other side, it's "Let's make America hate again," because that's all we're hearing here is let's hate Russia. And so, and the other good things he's done, I would talk in terms of some of the positives are. What he says he's going to do with not getting involved in foreign entanglements, but then on the other hand, he's going to increase the defense budget. And of course, the other negatives that he's done in terms of if you're pro or con are the deregulation, particularly in the environmental area. So there's been a number of issues on the environmental area that people that are pro-environment are not going to like. So it's just more talk right now in the beginning and not a lot of action.
Does Trump look like he will be a war or peace president?
It's a toss-up because on one end he talks about peace, and on the other end, he's going to build a military. And now America's bombing away in Yemen. And when you saw his address to the nation, and it was what? He started, calling this guy a hero, this soldier that got killed in Yemen. It's not a hero. I mean, it's the voluntary army. That's this guy's trip. Navy SEALs that's what they do. So he's not protecting me. He's making my life less safe by going into a foreign country and killing people. So you can see Trump is definitely trumping the more war card on one end as he talks about cutting down on the other end. So right now it's a toss-up.
Is the drain the swamp trend likely to be successful?
In some ways it is. One of the things, for example, that is a positive is that he's not allowing, former government officials to be lobbyists. So that's part of draining the swamp. But then again, he talked about as candidate Obama, about the Goldman Sachs gang and, not bringing them in. Of course, he didn't use the word Goldman Sachs gang. I use the word gang. But the Goldman Sachs mob maybe would be a better word. And again, you look at this crew, one Goldman Sachs cat after another has been doing business with them at one level or another, whether it's Bannon, Mnuchin, Cohen, one after another. So it's difficult to say on him draining the swamp, but it's just a different swamp probably.
Taking a look at stock markets around the world, are you bullish or bearish for 2017?
Well, we did a 180 about 5 days after Trump got elected. We were, as you well know, my being on your show so many times, was very bearish about the global economy. And after Trump got in and we saw that sharp reversal from an 800 points down on election night on the anticipation, the Dow futures, that he would get elected, to now this record-breaking rally, we saw right away that this was real. And the reason we said it was real was because of, again, what he's proposing. and that is dramatic tax cuts for corporations and for the middle class income. That's what he says he's going to do. Plus the deregulation that I talked to you about, that's very positive for business. Again, whether they like him or not, like those moves or not, it's not the issue. The issue is this is what he says he's going to do. If he does that, that's bullish for the global economy. And when you look at America's recovery since the recession ended, it's the slowest recovery this nation's had since World War II. So we're looking at a stronger recovery and a stronger global economy than we had previously anticipated if he follows through on what he promises, and if there are no wild card events like a terrorist strike of any major significance, either at home or abroad, false flag or real.
Is Trump likely to continue the strong dollar policy?
You know, he tries to talk it down, but the dollar is strong because the other currencies are so weak. And his talk about China devaluing their currency is nonsense. They're not devaluing it on purpose. They're trying to stop capital outflows. They spent nearly $1 trillion last year in doing it. They're killing deals, many deals overseas, and trying to keep money back home. Matter of fact, one of the reasons why you're seeing Bitcoin soar the way it is 94% of the actions coming out of China because the yuan is getting so weak. So no, there's nothing he could really do to weaken the dollar, other than, of course, to create a massive amount of debt far beyond. You know, Obama doubled the debt, by the way, from 10 trillion to 20 trillion, but nobody seems to want to talk about that. So the only way the dollar is going to weaken is if we go into much more debt, and I don't see that happening.
Do you think we'll see breakout gold and silver markets in 2017?
No, not unless there's a wild card event. Because as you're going to start seeing, they're going to raise interest rates in the United States. And again, we've done a 180 on this. And the higher interest rates go, the weaker gold goes. There's an opportunity cost in holding gold. And that opportunity costs more when the dollar gets stronger and interest rates go up. What's going to make gold stronger, of course, is on the global issue. And there's the paper market and the physical market. And you're looking at the physical market, for example, in India, in the last month, gold purchases of the hard asset increased 82%. But again, we look at gold as a safe haven asset in a time of global uncertainty, which never goes away. And I mentioned wild card events, and there's no greater wild card than Trump himself. So we still look at gold on the downside risk of about $150, and gold does not gain major strength until it goes over $1,400 an ounce.
Does it look like the marijuana legalization trend in the U.S. will continue this year, and will the Trump administration be on board?
We don't know if the Trump administration is going to be on board. It's a state issue. Will they finally get rid of the federal laws against it? Probably not. They didn't do that under Obama. And they talk about the new Attorney General, Jeff Sessions, being anti-marijuana. We think to a low degree there's going to be much of an impact. And the business of Trump is business. I mean, look what happened as soon as they legalized gambling. Trump's building casinos. So when you also look at the trouble states are in, always trying to gain more tax revenues, and marijuana is a huge tax driver. Just look at Colorado. Colorado taxes on that the state has gotten from marijuana are higher than they got from alcohol. And that's phenomenal. And it's just beginning. Same with Washington. You're seeing sales of over $1 billion in the state of Washington in marijuana. So we believe that both medical marijuana and recreational marijuana use is going to be voted in by more and more states. 28 already have them, and it's going to be a big investment bonanza.
Is it a good idea for Canada to legalize pot?
And we believe it's a good idea for everybody. I mean, who doesn't know somebody that smoked a joint, other than, of course, Bill Clinton, who smoked but didn't inhale? I mean, come on, when are people going to grow up about this? Look at all the drugs people are taking from Big Pharma that's whacking them out and killing their brains, and they're worried about pot. I mean, look, if the planet could feed us, could it heal us? And when you look at the studies coming out of Israel and Spain on the medical benefits of marijuana, and I got some stupid legislator telling me what I should do and how I should do it, this is insanity that we got a bunch of morons controlling this thing. They've never been able to win the war on drugs. All it's done is cost lives, put innocent people into prison for a lot of little losers with bad attitudes and probably sick minds that have made this stuff so illegal, hard to get, and stopping the positive elements of it, which are on the medical end. And again, you're not getting the kind of research and development from the United States that we should be getting from it because of the federal restrictions. You know, I'll tell you who wants to stop this more than anybody is Big Pharma and Big Booze, because those are the two areas where pot's going to erode their profits.
We'll have more with Gerald Celente next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Gerald Celente, the publisher of TrendsJournal.com. Gerald, is Trump taking on the establishment and the deep state?
I don't think he's taking on the deep state, because the deep state deep-sixed his Guy Flynn, who was opposed to the deep state in many ways. The CIA and all the intelligence agencies. And Trump himself has come out and talked about it. So I think they showed him who's boss. And, but as far as taking on the Republican Party, there isn't really any party. He's the party. And there are no parties. They're just shadows of nothing. And as he showed by him defeating the Republicans, and when you just go back as you know, not even a month before Election Day, neither of the leaders of the Republican Party were supporting him. You know, so the deep state, though, is deeply entrenched in America, and they're calling the shots at a high level, we believe, as evidenced by the ousting of Flynn, an NSA who really didn't do anything. So he talked to the Russians, big deal. You know, what's the big deal? He talked to the Russians, so what? You know, I mean, come on, you know, look at all the money the Clinton Foundation's gotten from all these countries. You know, that's illegal. So it's more, the deep state's deeply entrenched. It's what Eisenhower warned about in his farewell address to the nation in 1961, that the military-industrial complex is robbing the nation of the genius of the scientists, the sweat of the laborers, and the future of the children. And here we are.
Is fake news a trend?
Fake news has been a trend for how long? Forever. In my lifetime. You know, look at the wars that they sold us. I mean, before my lifetime. Remember the Maine. That was the Hearst organization that got us into the Spanish-American War. And it's one lie after another they keep putting up there. Look at the New York Slime. The New York Times, who got to put in that BS story filled with lies and inaccuracies about Saddam Hussein having, buying, aluminum tubes and uranium and yellow cake and on and on and on to make weapons of mass destruction. And it's one piece of propaganda after another. Look what they did with Assad having, killing his people with chemical weapons. That was never proven. It was disproved. We wrote about it in detail in the Trends Journal as it was happening. Why do you think only 11% of the people look at the media as having any credibility? And this is before they came out with a fake news story. They're the biggest propagandists and sellers of fake news. And not only the United States, it's global. And so when you look at the facts and the fake crap that they've been putting out, the reason they came out with this big fake news thing is because they lost the election. The major media in America lost the election. We did content analysis on this about how anti-Trump they were. And all you had to do is look at the editorials in pro-Clinton and supporting Clinton from the newspapers. The facts are right there. So when they lost the election, they came out with the fake news stories, and they haven't gone away.
As technology continues to eliminate jobs, what jobs will be in demand for 2017 and beyond?
Well, we're talking about fake news, and you tie that into all the cyber insecurity going on. Anything having to do with cybersecurity is going to be big. And there's still going to be great advancements in medical, in alternative energy. Just about every field is going to see growth, but we're going to see more robotization as we move away from the next field. We went from industrialization to robotization. So the jobs that don't need people with skills to do, you're going to see, and even with skills to do, are going to be replaced. But when they get replaced, new ones come into place as new technologies are invented, and then those new technologies bring in new workers to do them. So there may be a downturn in a short term for robotization, but we see growth, across the board in a lot of fields. And again, even in manufacturing, because when you look at why America has taken manufacturing and other North American, Canada has taken manufacturing to cheap labor countries, it's not as though they're building plants with high sophisticated, robotization and automation. They're just using cheap labor. And so when they bring the jobs back, well, they're going to see what's cheaper to do. More labor or more automation, robotization. So it'll be a toss-up on both ends.
Are there pros and cons for having a cashless society?
There are no pros as we see it. The cons are that the con men or the government, a bunch of con men and women, they got to be equal here. It's there so they could show every penny that we spend and that they could get their hands on it. And of course, they use the pro is that how easily accessible it is not to transfer cash. Oh yeah, you put cash in a bank and then you tell them to transfer to whoever. That's such a big deal. But though we've taken that step away, so now it's all digitized. It's blockchain and it's accounted for. And that's one of the major reasons why they did in India when they called in 86% of the currencies was so that it becomes a cashless society so that the people could pay the taxes that they haven't been paying.
Are multiple country trade deals a thing of the past?
Now, they'll continue to go on, but when you look at the trade deals like the Trans-Pacific Partnership and the transatlantic deals, these aren't really trade deals at all. What they are to give multinationals sovereign powers over countries, allowing them, if you don't want to sell cigarettes, for example, in Canada or the United States, and they pass laws very restrictive to sell them, then the tobacco companies can sue your country. That's what that was really about. Or if you don't want to pump oil or whatever you don't want them to do and they want to do it, they'll have the right to bring it to a tribunal court that, of course, is stacked with their people. So the trade deals are pretty much as they, as far as new ones, they're pretty well saturated. But there's going to definitely be a reversal of the trade deals that have been put into place with the Trump administration. When you look at the people he's brought in, like Wilbur Ross, Mnuchin, and Cohen, and others, these are tough business people, and they're not bureaucrats, and the deals are terrible deals. They used to have a thing called a chicken tax under Lyndon Baines Johnson when he was president, when the United States was dumping chicken into Europe. And Germany slapped tax on the incoming chicken because they were driving their people out of business. Well, what Johnson did, the administration, they put a tax on those incoming, Volkswagen vans that used to come in, the buses, 23%. And they were coming. So they slapped that on all of them coming in from everywhere. But Bill Clinton took them off with NAFTA. The country didn't go bust because we had those taxes on. It made Americans able to compete at a better level and put more people to work. So it's that kind of thing where they're going to put tariffs back on. Tariffs have been around forever. And so to think that you have to have a tariffless society And when you have so much slave labor, the only people it's helping are the slave owners. And so whether it's a company, who's making footwear or apparel, I mean, they're just slave owners. That's all they are, making clothes and bringing it in, or athletic footwear, to mark up the prices astronomically as they're paying people nothing to do it. So the trade deals are going to be a positive, I believe, because it was one of our top trends for 2016, having nothing to do with Trump, are self-sustaining economies. I mean, you buy local is better than buying local, or as much as buying local is buying national. So it makes perfect sense to support your businesses that are in your country that are employing people. So we're going to see more and more of that.
Are retail stores in trouble due to the online shopping and delivery models?
Absolutely, to some extent, but not all of them. And the ones that are going to thrive are the ones that are in neighborhoods where people still like those kind of experiences. So yeah, there's no question that they're going to erode profits from them, as they're already doing with so many already, and especially in the malls, where people don't want to drive to go there anymore. It's not a fun thing to do as it was when they were first invented in the 70s, and it's a different world now. So the products that you don't need to go shopping for are going to be delivered to you. But if you want the shopping experience, and a lot of people still do, be more of a balance than it is, than an extreme, we believe.
Is there a trend in the U.S. real estate market?
I believe personally that the real estate market's topped, and not only in the United States, but in North America and in much of Europe and in other places, particularly in the States when interest rates go up. You're already seeing slowdowns on the luxury ends, and less banks and lenders willing to lend for both commercial and real estate development and multi-dwellings. And prices are already softening as well in a lot of major cities. So I believe the real estate market is peaked right now, but I do not see a crash of it unless they dramatically raise interest rates.
Organic foods and clean water. Is demand increasing, and is the Trump administration listening?
Trump administration doesn't seem to listen to anybody, nor do any of the administrations. The clean food and clean water trend are going to be continuing. I coined that term clean food back in 1993. Matter of fact, the New York Times did a major story on it a few years later. And that's food that's also brought to market in sanitary conditions, and so it's not only organically grown, but there's going to be a market, particularly among millennials. What happens is when you're earning less and you become more and more conscious of how you spend your money, and that's what you're going to start seeing more, and that's why the trend was very strong in the early 90s, mid-90s, when the dot-com boom came along. There was a big decline in health consciousness, the New Age movement. It did a big shift as when people started making a lot more money, they started spending it more recklessly as well. So we're going to start seeing a pullback in some areas, but not in that area of clean food, buy local, and sustainable agriculture. And water is going to be it's continuing in very many places around the world to be a high commodity product, particularly at the higher end. It's not just bottled water, but where's the water bottled, who's it bottled by, and is it really clean?
Will the demand for electric vehicles and driverless vehicles continue to grow for the foreseeable future?
Yes, they will. We don't see the driverless vehicles going to the level that they're anticipating for quite a while. But we're going to start seeing more and more driverless vehicles in contained areas, for instance, on mining sites, where the truck is going from point A to point B. And trucking, where you're going from point A to point B. Buses, where you're going from point A to point B to point C to point D. You know your points that you're going to. But we think the hype is bigger than the reality, and it's very reminiscent in some aspects on the driverless end as the dot-com boom. On the electric vehicles, they're going to continue to grow. There's no question about it. However, it's going to be slower growth until the battery problem is solved at a much greater level than it is right now. And so that's what's really holding back the development of the electric cars as we see it. The battery development has really not accelerated to meet the needs of the average consumer in terms of mileage and recharging.
Are shortages in the commodities used in electric vehicles likely to cap vehicle production?
Well, as you mentioned, that's already going on now, as you well know, and I don't think it's going to be a long term. These are spikes that happen, just like with oil prices and other prices, whether it's iron ore, copper, gold, you name it, any commodity. So there may be a pullback at some point, but then there'll be an acceleration again after the profiteers make the profits that they want. And again, you name the commodity, you always see these kind of holdbacks. Coffee, cocoa, you name it.
If you were Trump's top advisor for a day, what would you tell him to do to make America truly great again?
Abide by the proposals and action plans of OccupyPeace.us. Close all the military bases overseas. He talks about rebuilding the infrastructure. He's talking about chump change, $100 billion a year, $1 trillion over 10 years, in a budget of United States budget of $4 trillion. Bring home the troops and have a work project administration rebuilding this country rather than rebuilding Afghanistan, which we spent more money doing than we did with the Marshall Plan after World War II when adjusted for inflation. No foreign entanglements. Honor the founding fathers. He talks about the great military. Let's get this straight, boys and girls. The United States military has not won a war since World War II. Just a lot of bad attitude and a lot of murder going on. And it's not going to get any better. He's going to eliminate ISIS from the face of the earth. Read our Trends Journal. We have to look at the cover, Crusades 2000, and Trump is that crusader. It's all this is. It's the 10th crusade. Why do they hate us? I can't figure it out. Possibly because you killed millions of people, innocent people, in countries that they didn't do anything to you. So that's what I would tell them to do. And stop with this building the military. Why do we need such a big military? All we have to do is protect ourselves, and to make America great again, force Congress to vote to go to war, which they have not done since World War II. They give El Presidente of Los Estados Unidos, the commanders-in-chief, to take the nations to war. So abide by the Constitution, bring home the troops, put the money to work rebuilding this country rather than destroying others.
You have a conference coming up in Ireland. Can you tell us about it?
Sure. Well, you could go to our website, trendsresearch.com, look up on the front page the Trends Conferences, and it's in June in Ireland, and it's going to be a wonderful trip. There's more than just a conference. There'll be, of course, tours and staying at a beautiful place in Galway, and we'll be talking about the trends shaping the future, how to become an entrepreneur to take advantage of them, seize the opportunities and avoid the dangers, and have to have a good time as well.
Gerald, how can people find out more about Trends Journal?
Go to trendsresearch.com, and with the Trends Journal, we also, of course, we do Trends in the News broadcasts each weekday night. We have a Trends Monthly. The Trends Journal, of course, is a quarterly. Trend alerts each week, and, of course, the conferences and more information. You could find it all at trendsresearch.com.
Gerald, thank you so much for being on This Week in Money.
And thank you, Jim.
My guest has been Gerald Celente, editor of Trends Journal online at trendsresearch.com. Coming up, Pat Power, next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
We're speaking with Pat Power. Pat's a former floor trader from the Vancouver Stock Exchange. He's president and CEO of Arctic Star Exploration Corporation. Online at arcticstar.ca. Pat, welcome to This Week in Money.
It's nice to be here. Thank you.
Today we want to talk about the uptick rule. First of all, maybe explain what is an uptick rule.
Well, the uptick rule was designed for the venture markets, smaller markets, to help preserve, against bigger money coming in and manipulating the stock, basically. Venture companies are often, they live and die by doing financings, and the uptick rule was put in place to if you're going to short a stock, you're going to have to wait till someone takes it on the offer before you can short it. And that made it a little harder for the shorts to get into a small market and do damage as the short would do. And for some reason, they took that rule away a few years back, and it's really made it difficult for junior companies to finance in particular, because they're susceptible to larger groups of money who can come in and knock your stock down when you're trying to do a financing. And that's purely what makes the venture companies tick, is financing. So it's very difficult to survive that switch in the rules. And no one's quite sure why they did it, but that's what a uptick rule is. It used to be there, but it is gone now.
Do you believe the uptick rule should be reinstated for the junior markets in Canada?
Well, totally. I'm not sure why it was taken away. It was put in place to help smaller companies who aren't as liquid as bigger TSX senior board companies, who rely strictly on public financing most of the time to survive. And it worked very well for many, many years. And I believe IROC is the one that took that rule and took it away. And upon chatting with them, they said they've done studies that say it doesn't make much difference to junior companies, but anyone in our world would tell you it makes a lot of difference, and it has made a lot of difference since they've taken it away.
With attention being focused on shorters in the junior markets, what kind of damage can shorters do without an uptick rule in place?
Well, for instance, it's the financing. If a company announces a financing of $5 million at, say, $1, and a group of shorters who have a lot of money behind them come in and short the stock on a downtick, which you can do now, so they can aggressively push a stock's price down. If that stock falls below $1, where the strike price of the financing is, companies have a very difficult time convincing investors that that should be the price they put their money in. And often they create such a panic that a lot of companies can lose financings, period, because of short sellers in the market, which is their goal, is to knock the stock down. I mean, they sell at a certain price, they want to recover the stock and cover the short at a lower price. So I don't see how taking that rule away helps the venture exchange or any company on it. It's a very difficult thing to hold confidence with potential investors and current investors. And that rule used to help a lot. Since it's departed, I know many stories personally of people who have had financings that have had to be repriced, or they've lost them entirely based on lack of confidence from, again, current shareholders and potential shareholders.
What difference would it make if the uptick rule was still in place?
Well, I think there would be more confidence by those investors, and you have to set a price. And usually how it's done is you set a price and you try to maintain that price so people can look at the stock and say it's well priced for a financing, I'd like to participate. It's much harder for a shorter to push a stock down if they have to be on the offer side of it instead of the bid side. If you can hit the bid over and over and over again, you can theoretically knock a stock wherever you want it, as long as you have the money behind you. And it's the bigger groups of money that turn to our markets and go, well, these guys are all weak. If we can make a lot of money here. So I think the uptick rule preserves they can't go into a market and knock it down. They have to be on the offer side, the uptick side, and that makes it much more difficult for a shorter to get stock to go down, and the confidence can remain with the potential investors for any given financing at a certain price. So I think it's very important that remain, and I don't know why. None of us know why it was taken away. No one was consulted on it. So we think it's a big negative that it's not there anymore.
Is the average guy able to short the juniors, and what about brokerage houses and their traders?
Well, that's the interesting part. You have to have 200% of the value of your short in a margin short account to do a short. So it's really about how much money you have. If you have a lot of money, you can go short a market. If the average investor doesn't have a lot of money, it's very difficult to short. So it's a game cut out for money in groups of people who have money. So it's not necessarily in the best interest of our markets. It's people looking for potentially weak parties that, once right now you can step up, and if I put $5 million in an account, or a group of people do, they can do a lot of damage to the stock and benefit on the negative side of the result instead of the positive side.
How can junior companies combat the shorters?
It's impossible right now. There's no way to combat the shorters. It's a factor of who has the money. There's nothing we can do if there's no uptick rule, if there's no rule in place that can stop people from shorting. The only thing you could possibly do is potentially pull all the company stock out of the system, which means, at one point, shorting is about borrowing stock that's in the system. If there's no stock in the system to borrow, it's more difficult to short. You can have all the money you want, but if there's a short, if you can't borrow the stock, you have to be bought in. So the only way that we can really combat it is encourage all our shareholders to pull their stock out of the system and put it in a safety deposit box. That's the only way to combat that. Otherwise, we're at the big money will dictate where the stock goes, and that's difficult. And it's actually, in my opinion, it's just a form of manipulation on the downside. I don't understand how they could let groups of people come in and manipulate a stock down, because that's kind of what it is. So I think they've made a tactical error. I'm not sure why they've done it, but it's been very difficult for a lot of junior companies to, in particular, fund. Funding's really being hurt, and the price of the funding's being really hurt by shorting groups or the money out there that chooses to be on the short side.
The Canadian junior stocks now trade on multiple platforms. Could the uptick rule be reinstated separately on each platform?
I think it could. It's if IROC is putting it in place, it certainly could. Everyone has to abide by the same rules. It would be, those gray exchanges are a bit different because there's lots of odd things that happen within them, which is if you put a bid in, you're buying some stock on the offer, and you get a part filled, you'd think you'd be the lead bid at that point, but many times, in many cases now, you're not. So these nanosecond trading systems, I'm not sure if they're good. They certainly increase volume. I think they're probably based on commissions being cheaper, and I understand that, but it's the formats needs to be looked at very carefully again, because it doesn't appear to be the standard. Who initiates the bid is the one who buys the stock on the offer, and that doesn't happen. It's a very strange system at the moment. So I think you could do it. Whatever rule, all exchanges need to abide by the same rules, and that could be done, but there's some complications.
The German stock market has banned short trading because they said the idea of a stock market is to raise money for companies and not take it away from them. Do you think there should be a ban on shorting?
Well, I don't think there should be a ban on shorting. I think there should be a logic behind it. I don't think if it's an overwhelming tool to destroy companies, I think it's a very poor idea to have shorting in place. But with an uptick rule, I think that's fair market. There should be equal pressure on the upside and the downside in any given real market. But as long as they don't have an unfair advantage, which is if you take away that uptick rule, all it is a question of how much money do you have. And there's groups out there that have a lot of money that just, I don't mind anyone making money, but I don't like to see good ideas destroyed based on that. So I would think the shorting should still be out there, but in a format like with an uptick rule, where you have to wait till there's volume and upside to get short, rather than just hitting the bid and hitting the bid and hitting the bid and hitting the bid because you have the money that makes it possible.
Why do you think regulators are reluctant to reinstate the Uptick rule?
Well, it's a good question. My personal theory is the banks are involved. Banks are a big part of who IROC is. The members control IROC, but the banks have a very big say in that. I think the banks think the venture exchange is just, it's liability. They pretty well state that they don't want their brokers recommending small venture stocks. They don't mind if you go through their discount brokerage system because there's no one's telling you to buy these smaller stocks. It's just you get on the computer and you execute the trade yourself. So there's no liability. But I think banks don't like the liability of the smaller markets. They're a little bit riskier for their companies to deal with. So that's why I think there's a bit of a push to move away from the smaller venture exchange and into the higher price TSX senior boards that have a little bit more basis, and they're followed by more analysts that the banks, they're part of the bank system. I think there's a liability problem is the bottom line.
How important are smaller exchanges like the venture exchange when it comes to encouraging the exploration that keeps the Canadian mining business in business? Well, the Canadian mining business is based off the junior business. I mean, everything started out as exploration. Some projects go through to be in the mine state. Most don't. But they all started in exploration, and a lot of that came out of our smaller markets, our venture markets, the old VSC, the present TSX. It's a huge thing, and it's also fantastic for our economy. We take a lot of exploration. It happens in remote areas that have smaller communities that are totally supported by programs coming in, and it's just got a great benefit to this country, and it always has. And no one's actually sure why they're trying to destroy it, but there's been some efforts in rules and regulations, mostly out of IROC and the securities commissions, that hurt specifically the venture exchange. And just for that example, the Uptick rule, that was designed for a smaller market. It was taken away, and we're competing now on a level that it's very difficult to compete with the bigger companies. I mean, your question was good. How does a small company defend themselves against shorters? And the answer is you really can't. So there's going to be harm. The business is going to suffer, and less exploration will be done, less discoveries will be done, less tax bases will be hurt because we employ the contractors we employ for programs. And then the ones that go to mine state is a big deal. It's a huge tax base. It's a long-term tax base. All that's hurt. So there's implications here, but there's not a lot of ears. It's difficult because the mining business comes under scrutiny, and environmental situations occur, and it's difficult to defend yourself in the mining industry. So it's been tough, and it still is tough, and I'm sure it's going to be tough in the future. But we're still here, and we're a robust group of people who explore Canada and afar, and we will continue to do so. But it'd be nice if the regulators would recognize the contribution we've made over a very long period of time and try to help us, not hurt us. Do you have a message for the regulators and the politicians who, I guess, eventually regulate the regulators?
Yeah, I know getting elected is about getting votes, but there's a lot of people in our industry, and it will be counterproductive for politicians. It starts at politicians and goes down to the regulators, but someone needs to stand up for an industry that's really done well for this province and this country over a very long period of time. And it's being dismantled slowly, and it is being dismantled, and that's unfortunate. So as much as we can do, we have to get out there and change people's minds and change politicians' minds. And I guess the biggest thing you can do with politicians is try to rally. We'll take votes away from you if you don't listen to us, and we'll give you votes if you do. So that's probably the most effective way of getting something done is by either getting behind them or getting against them, based on what how they deal with our industry. All we want to be dealt with is fairly. It's just like anybody else. Just deal with us fairly, and our work is documented over decades and decades and decades, and our contributions are documented as well. So it would be that little ear.
Pat, can you tell us a bit about your company, Arctic Star?
Sure. Arctic Star is listed back in 2002. It's primarily been a diamond company for the last until current stages. We are involved in a niobium project in eastern BC, which has some really interesting potential, and we're going to be drawing that in less than 2 months. But mostly we're involved in diamonds. We have a project up in Lac de Gras, right beside the two big mines, Akati and Diavik, that we're going to be exploring this summer. It's a geophysical program based on going back to kimberlites that were previously discovered by, I believe it was De Beers in the 1990s, and just doing new geophysical techniques around the pipes to find extensions and possibly twinning of pipes and whatnot. That's one thing we're doing, and we have another property up in Nunavut, which we'll be hopefully drilling this summer too. It will be a new field if we do have a discovery there, but it's got good geochem. We've done a lot of geophysics on it, and it looks positive. So that's what we're up to, and I think we have a very positive future. I think the market's turning for the juniors, and that's a good thing for everybody.
Pat, thanks for being on This Week in Money.
No problem, Jim. Thank you.
My guest has been Pat Power. He's the president and CEO of Arctic Star Exploration. Online, you can find them at arcticstar.ca. And that wraps up our show for this week. We would like to thank our guests, Ross Clark, Gerald Celente, Pat Power, and thank you for listening. And coming up right after the show, a company showcase update with Bill McWilliam. He's the president and CEO of Cascadero Copper. If you have any questions for us, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm your host, Jim Goddard. We're speaking with Bill McWilliam, president and CEO of Cascadero Copper. Welcome to the show, Bill.
Yeah, thanks very much, Jim.
Can you tell us a bit about Cascadero Copper?
Right. We started the company in 2004 in Argentina, which was a perfect timing on our part. And it was the business plan was designed as a property generator. And we had a geochemical database, which was absolutely fundamental to the project. And we looked at the business plan was real simple. Just go into the field. Our core competency was boot and hammer prospecting, which isn't too popular anymore. But we went into the field, and the idea was just to find as many large-scale alteration systems that had evidence of mineralization in them. And we ended up looking at about 140 properties in the first 3 years, and we acquired 76 of them, I believe was the number. And we still have most of those. We're working our way through them right now. So on the way through, we've found a very unusual deposit. And it's a sediment-hosted cesium deposit. Cesium's a rare metal, not known to occur in epithermal deposits in any kind of volume. It normally occurs in a pegmatite, which is with the mineral pollucite, and there's 300 or 400 of those that have been drilled in the world. That the pollucite and cesium that is derived therefrom has a market in the oil and gas industry, and it's the largest volume user of a product called cesium formate. And it's controlled. The interesting part of where we're at right now, and this is a little bit of serendipity, is that there are two mines that have dominated the cesium business for the last 20, 25 years. The first mine is run by Cabot Corp, which is a U.S.-based industrial company that trades on the New York Stock Exchange, and that property is in Manitoba, Canada, and it's under a lake, and it's got some issues with ground falls, and it's going to at some point give way and fill the mine full of water and sterilize the deposit. On the other side of the planet, we've got the second one. The Bernick Lake it controlled about 80% of the cesium market in the world. But the second one was a mine called Bakita. It's in Zimbabwe, and it's essentially a lithium mine, but it's very rich in cesium as well. So they sold the cesium as a byproduct to the global market, and that sometimes was as high as 25% of the market, but normally in the 20s. And it has just recently run into trouble with respect to the cesium zone, the polysite zone in that deposit. The pegmatites form like onions. They form in discrete layers, built just exactly like an onion. And one of the layers in the Bakita mine is very rich in cesium, and it was found 65 years ago, and it's been in production of lithium pretty much without fail, and it's been on and off for shipping cesium. It now has no cesium left in the mine, and they're working on their stockpiles. And we don't know how extensive they are, but they're not going to last for very long. So we're in the position of getting ready to drill this property called Taron. It's not a high-grade cesium deposit, but it's very large, and it's going to, we think, have the largest volume of cesium, larger than both those two other mines put together. And that we're conducting a drill program. We started tomorrow or the next day. We'll have a 29-hole drill program going. It'll last for about 50 days or so, and at that point we should have a resource that we can build a metric on, a valuation metric. 43-101 style. We have good QA, people all over the place to do that. And then we'll be in I think, a logical alternative to one of the two companies that own control those two mines. So that's where we're at on that one particular property. It was our best property right from the beginning in terms of its grade. And we did some hydrometallurgical work at UBC, and the very positive aspect of the mineralization is that the run of mine, that is ore right out of the ground, with a simple crushing, it leaches with sulfuric acid, and we get extremely high values. So it's a very interesting project that has some legs here, we think.
Bill, can you maybe tell us what cesium is and what it's used for?
Well, cesium is a rare metal. It's got a wide variety of applications. The largest volume use is in the oil and gas industry for deep offshore well drilling. It's soluble in water. It's benign to all of the life in the ocean. The main applications that are increasing are catalysts. For example, Sumitomo, Mitsubishi have big plastic plants, and they use cesium catalysts to cool down to form the plastic at a lower temperature, so it saves a lot of money. There's a large and growing pharmaceutical business for cesium medical products. It is very useful in curing cancer. There's a little company called IsoRay that's done a lot of work in that area, and they're having great success. It's just many small applications build this company. 75% of the volume is still in the cesium formate business, but we're not going to be producing cesium formate. We're going to produce the substrate. It's called cesium hydroxide, which is the substrate for all other cesium compounds. So we'll be able to address a wide variety of clientele, and it's a very large market.
How rare is cesium, and how big of a deal is it that you found some?
It's a big deal that we found it, and the only reason we did find it was we decided when we put the business plan together, Tom knew that the alteration and mineralization of properties of lots of Argentine properties were different than in Canada or the United States or Mexico where we've worked before. So we used a 53-element ICP. It's an assay technique that included cesium, and we had no idea we were going to find a cesium deposit. But that's how it was actually found. It was a geochemical discovery. And we've been working on that property ever since, and now we're ready to develop it. Cesium has parts per million in the Earth's crust of about 4 ppm, which is very low. I think it's number 43 or so in terms of rarity. But it's not, its rare metal properties are industrial applications now. Like, it's very similar to something like a platinum deposit, which has a whole bunch of industrial applications, aside from being a rare metal that jewelry is made out of. So cesium is quite different than that. It's an industrial metal that is very rare, and we're very fortunate to have a deposit that may be the largest one on the planet.
Where can people find out more about Cascadero copper, and where is it traded?
Cascadero copper trades under the ticker symbol of CCD on the TSX Venture Exchange. We have a website, CascaderoCopper.com, which we're completely rebuilding, and it's almost finished at this point, but there's enough information on there to garner a pretty good idea of what we're doing. Failing that, everybody that wants more information can email me directly, and I can send them the internal reports that we've built for that property over the period of years.
Bill's email is bill@cascadero.com. Cascadero spelled Cascadero. Or you can give him a phone call, 604-924-5504. And for people who are wondering, we were talking with Bill McWilliam on February 28th, 2017. Bill, thank you so much for giving us an update.
Yeah, very good, Jim. Thank you for the opportunity.
My guest has been Bill McWilliam, President and CEO of Cascadero Copper. His website, Cascadero.com.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.